Welcome back to the deep dive. Today we are jumping right into something I find fascinating. It's this intersection of AI, investor psychology, and just pure conviction.
That's right. And if you want a shortcut to understanding what the smartest money is thinking about AI valuations,
You look at what they're doing, not what they're saying.
exactly. And right now we're unpacking the latest holdings from Thiel Macro LLC, Peter Thiel's fund. And, well, the message is loud and very, very clear.
So our mission for this deep dive is to figure out why a firm like that, known for spotting disruptors, would completely unwind its position in Nvidia, the leader.
And it's not just about the sale. It's about a huge reversal. It raises that one big question for everyone right now. Is the AI party, especially around the chip makers, getting overheated?
Okay, so let's get into the specifics
Yeah.
then. The core divestment. We're looking at the Q313F filing. What did it show?
It showed a complete unwinding. They sold every single share of Nvidia they owned during the third quarter.
Every share. So this isn't trimming the position. This is...
This is a 100% exit. To put a number on that, we're talking about roughly $100 million worth of stock.
Wow.
Yeah. For a fund like Thiel Macro to just wipe an asset like that clean off their books, that's a statement. It says a lot about the current price versus the perceived risk.
100% exit from a pioneer in growth investing. It feels like they're saying the easy money has been made.
Or that the market has just priced in too much future success way too quickly. They see this valuation as, let's say, tenuous.
Right. They're known for getting in early.
Absolutely. And now they're getting out entirely from the market leader. That tells you they think the concentration risk in the chip sector is just too high right now. It's a calculated retreat.
Okay, so if you pull $100 million out of Nvidia, where does that capital go? What does the portfolio look like after a massive change like that?
Well, the restructuring shows a really clear pivot. They're moving toward stability,
So less high-flying growth.
much less. The
Yep.
two largest remaining positions for Thiel Macro are now Apple and Microsoft.
That's a fascinating contrast. You go from the pure play, high multiple AI leader to these established, cash-rich tech behemoths.
It looks like a classic defensive move, but within the tech sector. They're not abandoning tech, just the frothiest parts of it.
And I'm guessing the Nvidia sale wasn't an isolated move then?
Not at all. It seems to be part of a broader caution. They also significantly, and I mean significantly, cut their position in Tesla.
How drastic was that cut?
Very. They reduced their holding by nearly 75% from the previous quarter, so you connect the dots.
And the picture is clear. A broad reduction in those high multiple stocks that have been driving the market and a shift into blue chip stability.
Exactly. But here's where it gets more nuanced. You might think they're running away from AI altogether because of bubble fears.
But they're not.
No, this is the crucial part. They aren't abandoning AI, they are repositioning within the AI ecosystem.
Okay, so how are they doing that?
Well, while they sold the dominant leader, the firm is still actively funding AI disruption. The sources we looked at show they're backing companies that are either competing with Nvidia or, operating right next to it.
So we're talking about companies like the chip rival Substrate.
Yep, and investments in AI startups like Mercor and Cognition AI.
So the takeaway is they're not saying AI is a bad bet. They're saying the leader at its current price is too risky.
That's it in a nutshell. They're shifting capital from the consensus trade, which is just own Nvidia, to more diversified, maybe higher upside bets on emerging players that haven't had those crazy valuations yet.
And they're not alone in feeling this caution, are they? I feel like we've seen this movie before recently.
You have. The most compelling parallel here is SoftBank. They sold their own massive Nvidia holdings back in October for almost $5.8 billion.
Wow. So when you see two giants like Thiel Macro and SoftBank making billion-dollar exits one after the other,
It sends a powerful signal. The underlying concern for both of them is clearly the valuation. They're doing the math and saying the growth priced in just can't happen fast enough to justify today's price.
and yet, despite these huge sales, Nvidia's stock has been remarkably resilient. It's actually up a little since September.
Right. The market isn't unified in panic mode.
So what is happening beneath the surface? What's the institutional fight that's keeping the stock propped up?
That's the million-dollar question, or I guess the billion-dollar question. And the data from the 13F filings of over 900 hedge funds, it reveals this extreme lack of consensus. It's truly polarized.
Tell me about that divide. What did the data show?
It showed something I've rarely seen. In the third quarter, you had 161 funds that increased their Nvidia exposure. They bought in.
Okay, so a lot of believers still out there.
But at the exact same time, you had 160 funds that reduce their exposure.
Wait, 161 buying versus 160 selling?
A near-perfect split. It's extraordinary. For every fund that agreed with Thiel and sold, another fund was on the other side of that trade, convinced it was still a buy.
That's the aha moment right there. The stock is just incredibly polarizing. It explains why it's so resilient despite these massive sales. There's just immense capital moving in both directions.
Exactly. The biggest, best-informed players on the planet fundamentally disagree on how to value this thing.
So what this all means for you, the listener, is that we're seeing this incredible tension in the market. You have institutional fear from players like Thiel and SoftBank pitted directly against this persistent belief in growth from another huge camp of investors.
It confirms we're in a highly speculative phase. There's a clear long-term vision for AI, but the short-term market health. It's completely opaque, and that's causing this deep, deep division. So to recap, a major forward-thinking investor signals extreme caution, cashing out of Nvidia completely. They're joined by SoftBank in this divestment wave, but the broader hedge fund community is split right down the middle. Buy or sell. It's a battleground.
Which brings us to our final provocative thought for you to think about.
Right. So if firms like Thiel Macro are moving capital away from the dominant leader, Nvidia, but putting it into its smaller rivals and adjacent AI startups, what does that signal? Does it suggest a belief that the next massive wave of AI growth won't be found by continuing to concentrate at the top, but instead that it will come from diversification from the emerging players that are challenging the whole hierarchy?
So the people who usually define the future are now betting on the underdog instead of the king.
Think about what that really means.